Yes, guys, as I was saying, I said, thank God for today. Yeah, for being here. Thank you for being here. Right. Now, remember where we stopped yesterday. You remember where we stopped yesterday, sorry to say. Guys, we did, I've demonstrated to you how to calculate, gross profit, right? Gross profit. Talk to me. Gross profit. How do you calculate gross profit? You minus cost of sales from sales, right? By now, I believe you know how to calculate gross profit. You don't know gross profit. We've demonstrated it several times. Okay, let's do like this. This is how to calculate gross profit, right? Sales minus or less cost of sales, then you get gross profit, right? For example, if you are selling bread, right? You know the selling price for bread, you know the cost price. You selling bread, let's say the selling price of bread is 5 rand, 10 rand. When I went to Eastern Cape, I bought 2 loaves of bread, 25 rand. 2 loaves. Yeah, a ShopRite, 2 loaves of bread. Was it ShopRite or no, it was Spar. But 2 loaves of bread. Okay, if you are selling one item, for example, bread, the bread, you're not making the bread, right? Okay, let me give you different scenarios, or perhaps let's say make 2 scenarios, right? You got a supplier that is supplying you the bread, right? You got a tax shop, then supplier comes in to give you the bread, right? Then you ask the supplier, how much is this bread? Then the supplier say, just for you alone, I'm selling it to you for 6 rand. For you alone, 6 rand, right? Now you go put the bread in your tax shop. If Dr. D happens to come in to ask for bread, will you tell, when I ask you how much is your bread, will you say 6 rand? Why? Yeah, you need to make profit. Hello, do you understand what I'm saying? What I'm explaining now? Right. You wouldn't sell your bread to Dr. D for 6 rand. Even if Dr. D say, you tell Dr. D it's 10 rand. I say, no, man, I only have 6 rand. You say, I can't sell it to you 6 rand. That is the price I paid. That is the price that I'm going to pay to my supplier. I cannot sell it to you the same amount. I need to make money. I need to pay my rent. I need to pay my expenses. Right? Okay. Now, you need to add something on top. Right? You need to add something on top. What we call the markup. Right? We call it markup. On top of that, your cost price. Something must be on top for you to say confidently, I'm going to sell it at this amount. Does it make sense to you? So perhaps you added, let's say 4 rand, now 10 rand. Then when Dr. D walk into your shop, say, I need bread, say, how much? Then when Dr. D asks you how much is the bread, you say 10 rand, right? With no joke. Say it's 10 rand because you got confident that if Dr. D buy that thing 10 rand, right, at the end of the day, when you pay the owner, the supplier, you're gonna make money, right? So let's assume that that is only for one product and one quantity, right? For example, let's say that bread, the bread we are talking about, you sell 500 bread weekly, right? So now For you to be able to calculate the sales for 1 week, what you gonna do? Your sales now, your income, your turnover, your revenue, right? You're gonna be 500 times your selling price. Are you getting it? 500 times your selling price. Your selling price is 10 rand, right? So you're gonna generate how much? 5,000. Is it clear? Are you with me? Hello, you at the back. Are you getting it right? You sure? Okay, let me look around and see who is not getting it right. You not getting it right. Are you getting it right? You know why? Because you seem to be serving two masters at a time, and you are losing focus on neither of the two. Huh? What she said? But you can hear me, but you can't understand me. But when I ask you just now, you say no. No, man. I've just posed the question to you right now. Not she had me, but she didn't understand. You know, there's a difference between hearing and understanding. You might hear me speaking, but you might not understand. Right? You sure you got it right? Okay. Now, 10,000. You sold the bread. At the end of the week, you got 10K. A lot of money for you, right? If you are not careful, you can be tempted. You think that the whole of that money belongs to you. But mind you, the whole of that money is not for you. The supplier is coming on Saturday to get his money, right? Because the supplier needs to give you bread again and get money for the one that you've been given, you've sold, right? Now, when the supplier comes, sir, here is another 500, but I want the money for the last one I gave to you. Now you need to go to your wherever you are putting your money yourself. Let's assume you are not putting money in the bank. But if you are putting money in the bank, the same thing, you need to maybe pay either through e-wallet or whatever. Right? Tell me now, how much are you going to pay your supplier when it comes? If you understand my simple analogy, how much you gonna pay the supplier? I said the cost price is 4 rand, right? And the bread is 500. So how much you gonna pay the supplier? Time is going. Tick, 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 tick. Who can give me the answer? Okay. The cost price for the bread. I want to be using the terms now. I don't want to be say, yeah. The cost price is 4 rand. Then the number of bread, the quantity is 500. So how much you gonna give this supplier? Huh? Work it again. 4 rand times 500. Yeah. So how much is gonna be? 2,000. Right. Is it 2,000? Okay. So how much are you selling the bread? It's a lot of money you make. You selling the bread. How much did I say you are selling the bread? No, how much did I say you are selling it? 10 rand. Then you bought the bread, okay, 10. 10 times, how much? Okay, 10 rand times, okay, 5,000, right? Then you give the 2,000. So now you got 3,000. So that 3,000 is your gross profit. Is it clear? That 3,000 is your gross profit. Who is not following me? Please, man. This one is the most simplest part. Before we dive into the complex ones, if you know you are not following me, perhaps maybe you don't understand the way I'm pronouncing it or whatever, please, I won't be cross. Tell me. I'm going to go back and explain to you. It's what we are doing here, right? Exactly what we are doing here. Who doesn't understand? Please, I say, please, s'il vous plaît. If you don't understand, tell me. You know what is s'il vous plaît? S'il vous plaît in French means please, s'il vous plaît. As you say, I say brief. Then, do you understand? Please, man. Do you? If you don't understand, say I don't understand. So if I give you a question, can you work it out? Okay. So that is how we calculated the gross profit. Right. Now let's come to the fixed expenses. Remember, was it yesterday or day before yesterday? I explained to you different costs that you need to incur when you are running a business, right? You got fixed expenses as well as variable expenses. Fixed expenses as well as variable expenses. Variable expenses, it fluctuates. It fluctuates. What do I mean by fluctuation? Changes, right? As per the volume of sales. If you like, you can say as per the production level, right? For example, if your business is doing well, a lot of people now are coming to buy bread from you. Your sales increase from 500 to 700, right? Your cost of sales is going to increase because I'm not saying the price is going to increase. The price is not increasing. The volume have increased. So when you use the increased amount now, the new quantity to multiply the price, that means you're going to now pay more to your supplier. Okay, let me try to rephrase it, put it in another form. Okay. Now, the supply, your business, some people have started coming into your shop to ask for bread. Bread sold out, right? Sold out. A lot of people are coming to ask. The bread is finished. Now you say, oh, this my market is doing nice. I need to increase the quantity now. When the supplier comes next time, you say, supplier, please man, make it 600. Right? Because this 500 people are buying it easily. A lot of people are coming to ask for bread. Right? As a rational business person, you would like to increase the amount, right? So next time, bring 600 as a brief, right? Then they're gonna give you the 600, right? That 600 now you sold it. Uh, we say 10 times, right? 600 will give you 6,000, right? Now, when the supplier is coming to take his money now, are you going to give him only 2,000 egg now? Is it 2,000 that you're going to give the supplier? No, you're not going to give 2,000 because he gave you 600. So you're going to be 600 times 400, right? Going to be 2,400. Did you see now? Because your sales is going high, right? Younger, younger, younger. Be careful. Hello? You say? Okay, you got it. You want me to give you the mic to speak? Okay, all right. You see, now your sales is gone up, right? Your cost of sales needs to go up as well, correspondingly. You see, when your supplier comes and say, my man, I've come to take my money, you're not gonna say, I'll be paying you 2,000, take your 2,000. Then the supplier will say, no man, Ujan, remember I added another 100, right? You're gonna ask you, say, remember I added another 100. It's no longer, I gave you 600. Now you get, no man, it's not correct. Did you see? You need to pay him the correct amount. You see now the sales is going up, as well, the cost of sale is going up accordingly, no correspondingly. That is why we said cost of sales is a variable cost. Did you understand what I mean? Right. So now we got another type of cost that is fixed. Whether you increase your sales or your sales is going down, it doesn't increase. Do you understand? For example, let's talk about the rent. Eh? Rent. Rent, whether you told your suppliers to give you 10,000 bread and you sold that 10,000 bread, or you sold one bread, at the end of the day, it's the same rent you're gonna pay. Does that one make sense to you? There are certain expenses that are fixed, it doesn't change. Right. For example, if you employ somebody to be selling for you and you are paying that person salary, right? That person needs to focus on the salary. That person will not be foreclosing into your business. You say, my master, boss, I see now you are making a lot of money in this business. This month, I'm not gonna accept this salary. You see, if you employ somebody start behaving like that, it's better you fire that guy because it's now intruding into your affairs. So what I'm trying to say is salaries, right? Is a fixed expense, right? Okay. Now let me introduce another one that's gonna confuse you, but I don't want to confuse you. I will still bring clarity to you for you to understand. Wages. You know the difference between salaries and wages. Wages is what you pay to casuals, employee casuals. They are not permanent, right? Helpers. When your business is in a good shape, you know, going upward trend, you employ casuals to help you. That means when the sales is you having good sales, you employ casuals. When the business is not good, meaning the sales is going down, you lay them off, right? So you pay them wages. That one you don't consider it as a fixed expense. You don't consider it, yeah, as a fixed expense. It's a variable. Salaries is fixed expense. Wages is variable. What about insurance? Insurance, premium. How do you pronounce it? You call it premium or premium? Yeah, it's the same, right? If your breast sales is going up, the insurance company will not fool you. Say, hey, my man, I see now that you're making a lot of sales. We're gonna increase your premium. No, unless the policy, you change the policy, right? The terms and conditions of the policy change. Do you understand what I'm saying? Right. So those are the things, the basic things that you need to know. Then, having removed the cost of sales, whatever that is left, call it the leftover now, is not your money. You still have certain fixed expenses that you need to cater for. You need to pay for all those fixed expenses, like I have mentioned. Now, when you remove the money, right, from what is left here, gross profit. Then you have what we call net profit. Net. When they say net, net means all deductions have been made. You've removed all the deductions. That is why we call it net. When you start working, they say, what is your net salary? Net income. That means your tax and all those stuff have been removed. Right? Does it make sense to you? Right. Now, today we are going to talk about how you need to express your gross income as a percentage of your sales. Understand? Express your gross income as a percentage of your sales. Even that language, that statement alone will tell you what to do. That the main thing you need to focus on there is the gross profit and the sales. Express your gross profit as a percentage. When they say express gross profit as a percentage of sales, that means gross profit, numerator, then sales, denominator, times 100 over 1. Now I've introduced two concepts that might be confusing to most of you. But in elementary mathematics, you should know what is numerator and the denominator. Who doesn't know that? Hello? Do you understand what I'm trying to say? No, I want you to get a distinction in this paper. Right. Do you understand? So now, if we want to calculate perhaps the gross profit percentage of this simple business, how are we going to calculate it? For example, right, we're going to say, where's the gross profit here? 500. Divide by, not time, sorry, divide by cost of, not cost of sales, right? Then times 100 over 1. Times 100. When I say 100 over 1, you guys get confused. That was how I was taught when I was in primary school. Times 100. We always say times 100 over 1. Okay. 500 divide by 1000 times 100 because you are expressing it in percentage. Anything that you say times 100, it means you are expressing it in the percentage. Right. Yeah. The first 500 is 1000 divided. Huh? No, it's not going to be in fraction because you say times 100. It's going to be in percentage. Confusion. Huh? Okay. Jonga, this is a different example. It's 50%. You are correct. You correct. You are very correct. Very correct. Right. You see, I'm happy. I don't know about you. Are you happy as well? Okay. Now, calculate the net profit percentage for me from here. Net profit percentage. Net profit percentage now. Net profit percentage. Net profit expressed as a percentage of sales. Net profit expressed as a percentage of sales. Hey, good girl. She got it. She got it. Excellent. That's it. Excellent. Right. But that one gonna be giving you some funny figures now. Is they said, and convert your answers into, or put your answer in three significant figures. Three significant figures. Then I'm introducing mess now. That one gonna confuse you. Or in two decimal places or in three decimal places. You've done that, right? Okay. Hello. I see now that you're not focusing the way you were at the beginning. No, you. I see you. Are you lost? You sure? Okay, let me look around and see who is lost. Hey. I see you. Okay, guys, you know what we are talking about now, right? What did you get there? Net profit. Good, good student, good student, clever student. I'm impressed, yeah. You know, you see, I believe in one principle, right? It's not it's not a matter of how far, but how well. You see, if we rush this thing, I say I'm done, and you don't understand it, it's of no use. But I'm slow like this. The most important thing is for you to understand it, right? Okay. Because I know most of you are used to this concept. It takes time for it to sink into your brain, right? This is what you did. You got it right, right? Okay, I'm happy. Now, let's come to this. This one is a little bit of a dilemma, but it's not a problem. I will make it, I will explain it in a more simplified way, in the best way I could explain it to you. That will make you to understand. Guys, you know, I remember when I did this thing was when I was doing my degree program in business administration, right? You see, I don't know why they are, but it's good when you know it now. When you get there, right? It's gonna be very easy for you to understand, right? I will explain to you the concept of this. Jonga, waited. Even those days, I used to get confused of this, but later I was able to grasp it, and you know, I became a teacher and started teaching others the concept. All right, guys, when you look at this stuff and compare it with what we did before, you got differences, right? The example of the previous example, let me put it that way, is for one product, right? For example, bread. Ne? I gave you example of just bread, one product, right? But in this situation, obviously, when you got a business, there are certain businesses they don't sell only one product. Do you understand what I mean? You cannot have a. It's very rare. You have somebody having a tuck shop selling only bread. Ne? It's always mixed up with some other product. Now you want to, for example, in this scenario, it could be more than two products, right? But when you want to calculate the gross profit percentage of more than one product, right? You use this formula. We call it weighted average gross profit percentage. Weighted average, right? You take the gross profit percentage of product A, then you take it, the one for product B, then you put the average together, then it gives you that weightage, right? Do you understand what I mean? Yeah. So that is where this system, this formula is applicable. Not more than one product. Even if it is 5 product or 10 product, you can use this one, right? The previous one I've demonstrated to you. That one is for only one product. So why do you need to use this product? Under what scenario? Because when you are selling more than one product, there could be a situation whereby one product is selling more than the other in terms of the turnover. Right. For example, you're selling bread and milk, just as we have here. It could be the bread, right? The milk is selling more. The rate at which people, when I say selling more, the rate at which people come to buy the bread or milk, right? The money you are making there, the sales, is higher than the other product. So if you want to calculate the gross profit percentage for the two products, you need to take that into consideration. Because If it's in your business, make constitute 65% of the sales, right? You cannot use your 19%, right? This no, you cannot use 29% only as your gross profit. Do you understand? Because it's only constituting 65% of your sales. Then the other one is constituting 35% of your sales, right? So that one is constituting the gross profit is 33%. So you need to know, combine the two to know the average, the weighted average. That is where we need to use this formula, right? In the exam, even if it's three products, let me give you the trick on how to calculate this. Even if it's the three products, when you add up the three, it must be 100, right? That is very important thing for you to know here. Even if, let's say, make bread, sugar, right? They will give you the certain percentage. All must be added up to make 100. If they want to trick you in the exam, I don't think they're going to trick you like that. They will give you three products, then they will give you the percentage of this. They say, for example, 60, then 30, then this one they're not going to give to you. You must know now that if you are 60 plus 30, then 90, the other one going to be 10%. You calculate it by yourself, right? Then this one's going to be given to you. Right. For example, now, okay, it doesn't necessarily mean that this one must be 100. It's only this one that must be 100 when you add the two, or when you add the whole percentage. Then this one is going to be given to you. So what you need to do is you use this percentage, you use this to multiply this other one, which is 1 times 2. Then you got the gross profit percentage for that. Then you use this to modify this, then you add up. It will give you the weighted average gross profit percentage. Right. If you are able to understand this, all other aspects that we are going to do here are going to be easier for you to understand. So it's very easy. Right. Is the period over or what? Okay. Guys, what you need to do, you need to practice it, right? Practice it. Wherever you've got challenges, then you come back to me. We need to know it is very important. Right. Okay, we're gonna stop here. So far, so good. You know, guys, when you are practicing it, use your calculator because sometimes you know how to do it. When it comes to exam tension and whatever, and if you don't know how to use your calculator, you're gonna get it wrong. You must always practice with your calculator to make sure that you get the right stuff. Right. All right. No, I haven't got a stapler. Don't worry, I'm gonna staple this stuff. Huh? Question paper. Okay.